All right, let's talk about PCP Car Finance. Personal contract purchase, right? It's made the dream of driving a brand new car feel, well, super accessible. But here's the thing. Behind those really tempting low monthly payments, there can be some seriously complex and costly traps. And in this explainer, we're going to break down exactly what they are.
You've seen the ads. We all have. That shiny, beautiful car you've been eyeing up, and it's yours for what seems like pocket change every month. It's an amazing offer, no doubt, but it really makes you wonder, what are you actually paying for? And, more importantly, how on earth is that final cost worked out?
I mean, that's the magic of PCP, isn't it? It gets you into a newer, fancier, safer car for a monthly fee that feels totally manageable. But the real problem, the one we're digging into, comes from this huge gap between the contract you're signing and what you actually understand is happening with your money.
And this quote just hits the nail on the head. Look, it's not that PCP is inherently evil or always a bad deal. Sometimes it might even make sense for you. The real danger is in the confusion, in the lack of clarity. People are signing on the dotted line without really getting the mechanics of what they've just agreed to.
So let's get right into the biggest point of confusion. The first, and honestly the most important trap, the way your interest gets calculated. This is the bit that catches almost everyone out.
Okay, so let's cook up a quick example just to see how this works. Let's say the car you want costs £30,000. You put down a £5,000 deposit, which means you're borrowing $25,000. Now, at the end of the deal, there's this big final balloon payment of £15,000 if you want to own the car outright. This means your monthly payments are just covering the $10,000 difference. Simple so far.
So, common sense would tell you that the interest you're paying is on that £10,000 part of the loan. The bit you're actually paying down every single month. Makes perfect sense, doesn't it?
Yeah, no, not even close. And this, right here, is the sting in the tail. It's the crucial detail that so often gets glossed over in the showroom.
Because here's the crazy reality of the math. You are not just paying interest on that £10,000. You are paying interest on the entire £25,000 you borrowed, including that huge £15,000 balloon payment that, let's be honest, you might never actually pay.
Just let that sink in for a second. The vast majority of people on a PCP deal just hand the car back at the end. They never pay the balloon. So for 3 or 4 years, they have been paying interest on a massive chunk of money they were effectively just renting. They had no intention of ever buying it. And this whole confusing mess with the interest, well, it can lead you straight into another massive problem. What's known as the negative equity spiral. This is where a tricky financial situation can turn into a real debt trap.
It's a fancy term for a pretty simple and scary idea. It means the value of your car has dropped faster than you've paid off the loan. So if you tried to sell it, the money you'd get wouldn't even be enough to clear your debt. You'd sell your car and still owe the finance company money.
Now you'd think being in this situation would be a huge red flag for a car dealer, right? But here's where it gets totally backwards. In the strange world of the car showroom, your financial problem can actually be twisted into a sales opportunity for them.
The way it works is deceptively simple. You want to get a new car, but you're, say, £3,000 in negative equity on your old one. The dealer just smiles and says, "No problem, we'll just roll that $3,000 into your new finance deal." And just like that, your new monthly payment isn't just for your new car. It's also paying off the ghost of your old car. You're digging yourself into a much deeper hole.
Okay, so we've talked about the fuzzy math, the financial traps. But what about the human side of it? The actual pressure you feel when you're sitting in that showroom is a massive part of this whole equation.
You know the scene? So many people walk into a dealership ready to go. They've got cash or a pre-approved loan from their bank, only to be told they have to sit down with the business manager for a compliance presentation. They're not just offering you an alternative, they're actively questioning the smart choice you already made.
Let's be crystal clear here. This is not about compliance. It's a sales ambush, pure and simple. It's designed to sell you their own high-profit items, from their own finance deals to often ridiculously overpriced insurance, paint protection, and service plans. It's all about boosting their bottom line, not finding what's best for you.
But here is the really empowering part. You do not have to just sit there and take it. These kinds of high-pressure sales tactics aren't just a bit unfair. In many cases, they fly right in the face of official regulations.
So, in the UK, there's a financial watchdog called the Financial Conduct Authority, the FCA.
They're the ones who set the rules for selling stuff like car finance. And a lot of the tactics we've been talking about are on very, very shaky ground, according to their own rulebook.
I mean, take a look at their Principle 6. It says a company has to treat its customers fairly. Now, does forcing someone who has already sorted out their payment into a long, drawn-out sales pitch sound like treating them fairly to you? Didn't think so.
And then there's this one, which is even more direct. Financial promotions have to be clear, fair, and not misleading. So calling a sales pitch a mandatory compliance meeting? I mean, come on. That is a textbook example of being misleading. It's just not true.
So here's the bottom line. This is what you need to remember. You hold the power in that situation. You have every right to refuse that presentation. They cannot tell you a sales pitch is mandatory. The rules say that the dealer has to act in a way that delivers a good outcome for you, the customer. So, after all these warnings and all these traps, what's the actual secret? How do you sidestep all this and get a genuinely good deal on your next car?
It all comes back to this one, simple, incredibly powerful idea: knowledge. It doesn't matter if it's PCP, a bank loan, or just plain old cash. Your best defense, your superpower, is to fully understand the terms, the interest, and the true total cost of what you're about to agree to.
And that really leaves us with one last question to keep in your back pocket. The next time you're in that showroom under the bright lights, just ask yourself, is this person really trying to help me make an informed choice, or are they just trying to sell me something? The answer could save you thousands.